Right, come on then, everyone is ahead into European trade on Thursday the 18th of April. Relatively positive markets overnight, bit of a pullback on the dollar, bit of a bounce higher in stocks. Obviously stocks fell a bit in yesterday's session, and overnight session has been relatively positive. Yields lower, dollar lower, and then a stocks higher in line with that. An interesting one overnight: U.S. nods to serious Japan, South Korea concerns over slumping currency, the Japanese yen and the South Korean won. Obviously, substantial downside on the two of them, and the U.S. kind of acknowledging that, agreeing with Japan and South Korea that they are going to consult closely on foreign exchange markets, right? Which kind of, if you read that article and you have a flick through it, it basically suggests that if Japan go and intervene by themselves, it may not be enough to actually get where they want to get to in terms of propping up the price of their currency. So, kind of maybe discussions, I think, around whether it is going to be a solo effort from Japan, or whether it's going to be a number of countries that are going to try and intervene and help prop up the price of the Japanese yen. So if that's the case and other companies decide to get involved and help the Japanese yen, that's probably likely to be a little bit more of a long-lasting move. If they go about this themselves, maybe it's not going to generate really anywhere near the sort of progress that they would hope for. So that's interesting comments, but ultimately does it change anything? Not really. Dollar yen being sold today, that's kind of more of a dollar move, you'd have to imagine, but certainly not a bad thing for the price of the Japanese yen. I mean, contributing factor to dollar yen being lower. If you jump across to the grid, you can see the Japanese yen aren't really having a bit of upside. US dollar down across the board. You can see US stocks higher across the board. S&P, Dow Jones, and Nasdaq, Russell. Then you look at European stocks, Asia Pacific stocks, green across the board. Australian dollar, green in line with these, also in line with, I don't say strong labour market figures, because the unemployment rate did tick up, but it didn't tick up as much as people had thought, and they added quite a number of, or a decent number of full-time jobs. So they kind of lost a number of part-time jobs and gained a little bit less full-time jobs. So certainly not a bad numbers print from, or bad labour market print from Australia in the overnight session. You can see commodities up in line with your stock indexes. So, your Aussie, your Kiwi, Canadian dollar, all relatively positive so far. Then stock index and commodities in line with that. Bond yields down across the board, which is interest rates cooling off or interest rates pushing lower. Still don't think it changes much really from the kind of the trends that are set, but again, you do need a bit of a pullback from time to time, and that's what we're getting at the moment, I think. US dollar down across the board, and you jump across to the charts and you can see the same thing. You can see the Aussie dollar, or the Aussie, Kiwi, Euro and Sterling all pushing higher. Euro, pretty aggressive move, which doesn't really make much sense, but anyways, dollar Swiss lower, dollar CAD lower, dollar yen lower. Obviously the dollar index then follows suit, so not a bad thing. Right, if you look at the moves kind of post CPI from last week, that is 270 odd pips on euro dollar, and now we have bounced back 85 pips higher. So not even a third of the move just as of yet. So this level 107 I think becomes interesting on euro dollar. 125 becomes interesting on cable. If you can't get up to those levels, maybe it's worth a punt. I don't think it changes the bias. I think you still got to look for dollar longs. You'll still be on the side of dollar longs, as not much has changed. Interest rates going to remain higher for longer in the US than pretty much any of the rest of these countries. So again, like, markets ebb and flow, and you get pushes up and you get pullbacks and all that sort of stuff, but ultimately if you chop and change your bias every time a candle goes in the other direction, it's going to be difficult to make any cash. So keep an eye on these charts. This is a dip on the dollar, probably likely that you buy back into it at some point. Equities trying to have a bit of a bounce, whether this is actually a bit of a bounce where they can't turn around, but if equities were going to retrace some of this downtrend that they've had for really since back end of March, the fact that yields are pushing lower does kind of help that. Right? Yields pushing lower, oil prices off pretty aggressively in yesterday's session, puts a bit of if you're looking at that in terms of inflation, I suppose intraday moves like that don't really matter. So, well, a bit of a pullback back from 87.50 down to kind of 81.50, 82. Sorry, there's certainly progress made on a bit of oil. If that pulls back, I'd say it's likely to provide a bit of respite, or certainly not going to be a negative for stock indexes. But US dollar pushing lower, bond yields pushing lower. That probably makes for a bit of a bounce back in equities, which we have had overnight. Asian, European stocks a bit more a pronounced bounce back, as you can see, but US stocks, if you were looking to buy a dip but looking to trade a retracement of this trend, maybe now's the time to do it. We don't have much out in the way of economic data for the rest of the week. We've nothing out of the US for the rest of the week apart from jobless claims a little bit later on today, number of speeches a little bit later on, but I wouldn't pay too much attention to any of them. I wouldn't sit there and watch any of them. I mean, you got to wait for them to come out and say something. Ultimately, if you spend your time looking at every single speech that a Fed official does, you're going to waste your time a lot of the time. So apart from that, then again, nothing tomorrow from the US. Retail sales tomorrow out of UK. Inflation tomorrow out of Japan. I don't know what the Bank of Japan even want from inflation these days, but to be perfectly honest with you, they've had no inflation for years. As soon as it starts to rise, it rose a little bit, but then it starts to pull back, and then that's when they hike interest rates. I don't think they're really concerned about inflation down at these levels. Probably looking more towards wage growth and things like that to go and hike interest rates into the way that their economy is fixed. But no high impact data today, not a lot to go off. Maybe today is a bit of a quiet day, but whether it's a bit of profit taking on some moves for a bit of risk on trading. But that's where we are at the moment. I think dips on the dollar get bought back into. Where you buy back into the dollar is I'll leave that up to you. 107, 125 on euro and cable don't look like bad levels. So we'll keep an eye on that. Any support levels on dollar CAD, probably a good one to look at with aggressive downside. In oil yesterday, you would expect dollar CAD to push higher, but which would be Canadian dollar weakness. If you're going to look to buy back into one, that would be a good one. But the kind of relationship between the Canadian dollar and oil has broken down in recent months. Not as strong of a correlation as it has been. Throughout history, obviously it doesn't. It's not one for one correlation every single day of every single week. So I will come back at some point. As of now, it's a little bit disjointed, that correlation. But US dollars probably need to look to buy back into them when the opportunities provide themselves is another question. But I wouldn't go too mad on a day like today. No high impact economic data, so maybe not much to drive markets and kick markets into gear. But that's the thought process going forward. If you decide to act on it, best of luck.